All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for May 29th, 2022. Um, Microphone check and screen share check, please. Okay. All right, we'll start with the Chi Wang Chong's contribution here. The sector spider relative strength assessment. So we have the zero line here. We have had a nice improvement these last 4 or 5 days that have gone from the bottom and the baseline to improvements. The leading candidates for sector strength, energy continues to be very strong. XLB has made a nice recovery. It is now in second position, slightly ahead of tech. Finance, I think, has made the biggest move of all, and it's now better than the S&P. And we've been seeing this. The first half of this move in finance started off with the big banks like J.P. Morgan and Goldman Sachs and Visa and American Express. But the second half lately has been the disruptors like Global Future of Finance, PayPal, Square, Robinhood, Coinbase. So as this has turned the corner and started to get well, the massive sell-off in those companies has created essentially a deep value play for those. So there may be some more momentum left in those guys. But remember, these are still just entering the range of normal, which is between +1 and -1. This is that range of normal. So this has been abnormal. This entire move here has been abnormal. It's just starting to heal. So we're not out of the woods yet. Then in the comparison between consumer discretionary and consumer staples, this big harsh sell-off in retail, this was a really negative retail sales number, which caused that thing to just get murdered. So XLP is still really on a deeply discounted value price play. Both discretionary and staples are lagging behind the broader market. So those other symbols like E, F, and B, and K are all to be preferred to the growth versus the conservative play. The fact that growth is in the lead lends a little strength to the argument that it's time to be focusing on tech and the disruptors. Sounds like my favorite rock band, Tech and the Disruptors. All right, let's get into Ken H's frames. All right, so here we are with ExxonMobil. This was the no-brainer trade of the week. And we're looking at weekly, daily, and hourly. And he noticed the Kata 2, a second Kata 2, which he gets this reversal and breakout with a tight risk box there. And it's been continuing to Kata 2 all the way up. This is at all-time high. No resistance overhead. Nothing to do but go. Who's going to bet against them? Continuing to, I think I'd be looking to add a position next week if I could. Target, and this one reflects that that really harsh sell-off in the retail that we alluded to earlier, which was this move on the weekly, the big gap down, and then the partial recovery. And you can see that gap here, all gap. So this is the new normal, and it has bottomed out and now is getting ready to break out above the previous swing high. So that's what he's got identified here. All-time high really all-time high in this time frame. So this breakout now is free to get as high as the gap closure. So this is all gap, no resistance, and nothing there to hold it back. He's got one position in with a really tight risk box. I'd be adding a second position on this one quickly and take advantage of it. I think Target will continue to dominate its little niche in retail. Coca-Cola, this was part of that great recovery in XLP when we did the component analysis on it earlier, the great sell-off, and then he bought the gap. He buys it using the gap as the risk box, and he's got 1, 2, 3, 4R in hand and ready to add a second position here, I would think, and then a third position if it breaks above the peak of the dragon. So this is just in great shape. The triumph of the brand. Cliff Natural Resources. Another big sell-off here in the discretion or in the staples XLP and the metals, I should say, and then the recovery, and there's his PSAR flip in the on the daily, and that daily found support right where you would expect it to find support. The last time that it initiated this rocket ship move to the upside was over here, and it gives you that move to 34. So it's made this recovery, found support, and now it's right here. So still has plenty of room to go. I'd say 30 is the crucial target at the peak of the dragon. So yeah, this one on the hourly peak, and then this one probably 32 on that peak. And notice how he's nestled that little Kata 2 move right inside the elbow. I think of it as an elbow if it does this. Nestled right inside here before it breaks out. So this is a moment of relative calm, and that's an area where if it breaks down, you're ready to go short on a collapsing dragon below this. So you're really only risking that little piece right there. And if it breaks out, it's an emerging dragon, and up it goes. And that's what happened right here. And he's deep in the money, halfway up the stack. I'd look at adding one more to play to there. Triple Qs for tech. Notice the harsh sell-off has found some recovery. He tried one CD here. Scratch that. I think this may have been one long, one short, and now a second one long on the emerging dragon. Yeah. Oh, I see. I'm sorry. Collapsing. There was a collapsing dragon. I missed that first. I'm sorry. Perfect. And then you can see him ride that down 3 legs. It rolled over. I'd have been really tempted in here for the short side. But this looks like an effort on an SSC. Didn't pan out. He tried the CD, scratched, and then stopped in reverse, which is deep in the money. And I think if it gets above here, above 315, that's where you could add a second position. You don't have to be right all the time. You just can't stay wrong too long. And he did a nice job on that one. Right here, Cisco, old school tech, extremely volatile. Notice the breaking of that support leads to this. And it's at, he got the 1, 2, 3 entry on a tight wrist box, working up the stack nicely. 43. Yep, and there's that entry. Really nice work. Held strong all the way through there. The PSAR has been a good stop for him. I like that as a second position here, with the idea being that it could close that gap pretty nicely. That's another 250. My stop would be not lower than the PSAR. I wouldn't be offended if you nudged it up into here, though. This is the triple finance on the long side. And this is that big sell-off in finance that has started the recovery. He's got his first entry here, already deep in the money. I would expect that to keep going. He played this as an ED. I don't blame that at all. And tight stop here. The fact that this is testing here and that none of this is resistance, you don't get resistance till you get up into here. So I think I'd like a second position right here at 91.50 and run that north. Dexcom Incorporated is a healthcare company. Healthcare, like everything else over the past couple, 3 weeks, got slaughtered. Well, that's the argument for the CD if you ever needed one. And it's making the nice turn right here. If it can hold here, then you're getting a COTA 2 entry with an effort to get to here. That's 12. That's $32 to the upside, and maybe a $10 risk. The short side is easy to see too. Yeah, Ken points out the remaining frames are all from the Godzilla report. That's what Godzilla looks like. Dramatically oversold, huge volatility, and ready to stomp in either direction. PEG. What is this? Police Services Enterprise Group. Has stabilized here and is postured to make a large move this way or a large move that way when those triggers are hit. I like this one already just to get down to here, because you're looking at all basically a $2 move on maybe a 50-cent risk. So I think that short side is tradable. And then if this fails, a second position at 67, and then it fails all the way down to here. And then the upside's easy to see. All it has to do really is clear this, clear that. Once it can clear this, then it goes to here, here, here. If I could draw a straight line, I'd be dangerous. Pfizer. This looks like a almost a fireworks or a fence sitter. Yeah, because he's right in the middle of this. That's the peak. That's the valley. So he's stuck right in the middle. And he's right at a crucial turning point here. The last two times it was there, it sold off harshly. So the downside is easy to see. It could get to here pretty quick. But then if it is able to clear this, that's not really resistance at all until you get to here, which is $3, $2 move, excuse me. And then here, and then finally here. So the upside move is easy to see, and the downside move, and you're not risking that much. Yeah, that sell-off is the one I think that works. Ulta Beauty, specialty retailer. Notice how large the volatility has been on the weekly, and the fact that this thing has just experienced two large gap moves that pushed it way to the top. That's why you get such an enormous volatility, 5-day volatility on this thing. So this to me looks like, well, are you going to push through this move to the upside, or was this all wrong and that we're going to see a decay? That makes this a perfect zero state ready to trade on a tight risk box. That I think I would want to be short at about 415 or long at 425. All right, here's Luke giving us a look at the longer term key prices on Aussie. There's our nice little box in the middle. This nice run up the whole week. And now he's postured to run up to here. And if that works all the way to here. And then the downside's also easy to see. 4 bar lows below the break of the RL10. Yeah. So I like that breakout. Either way. And I think that's an aggressive second position. But on the other hand, if it doesn't fall through the third one, you'd rather have gotten the second position here and then had to cash it in here if it doesn't break through. So be ready to cash that on the second position. All right, and I think Bitcoin. Bitcoin's our final one. So the 5-day range on Bitcoin is really small, very much compressed, but also it's at the end of his 30-day harsh and a 150-day harsh, but has turned into a nice tightly compressed zone. So any breakout, say above 19, has got to be instantly piled on. But then any breakdown out of here has got to be respected and get on board. So maybe you play the breakout from here or here with half that space as your risk box. And I think that's the way he's got it laid out. So that looks pretty good. All right, that's everything we got for tonight. We'll get this published and posted. Memorial Day and Thanksgiving Day are my two must celebrate holidays. It's both are times for reflection on gratitude and forgiveness, and thinking of great humans that I know. So Take good care, and we shall see you tomorrow, ready to go. Oh, that's right. Tomorrow is a reflection day. Uh, no market open. Oh, let me also point out that I have finished uploading about 400 gigs of videos to the live trading research weekend um, uh, course, the live trading through COVID. Um, I'm going to price that one at $4.99 as a convenience. You could probably assemble all those reports and folders and videos and lessons, but I've got a lot of um, that's all now organized into a really tightly structured course, and I'm going to continue to keep adding the new archivals to that. So that's a nice way to get on board. All of the foundational lessons that we learned from the last few days before COVID ran amok, and it's us learning live in public. That's an amazing course, and I'm gonna introduce it to the world at 497 um, for early adopters. So be on the lookout for that. All right, guys, that's everything I got for tonight. We shall see you tomorrow.